Gold H4 time frame price is going up since 2300. Now it is making new sideways raise near 2600. Last week there was so many news and they were so extreme. Beginners were mostly confused last week. Every day their long-term target was changing and they were trading intraday. There was big bad news. If you see videos and news headline, it was like starting of World War III, but gold did not break out. Answer is simple. After rate cut, every war will only increase inflation. If inflation increase after rate cut, then that is very bad for gold and for the Fed, because those rate cut can priced out and they can also turn into rate hike. But last 1 year it is same war, same country, and only difference is there was hike 1 year ago, now it is cut and price was 1810, now it is 2600. Another thing, if you see all the economic indicator, let's say Fed Monday speech last week, he has said one thing clear. In next two FOMC meeting, they will do 25 and 25 basis point cut, not 50. And after that, all the data last week, they have said GDP revision, increase their confidence and no recession. You have ISM service PMI last week, which is most important indicator. It was very strong compared to expectation. Then later NFP, that was very strong, because at the same time there was hurricane in USA, plus there is a port strike. Despite two negative news, NFP came strong. Unemployment rate, instead of going up, it is going down. So these economic indicators are saying soft landing, or in simple way you can say second inflation wave risk increasing every day. Either war increase or after those economic indicators, in same language like Fed said, these all economic indicators must go in same direction, not in opposite. If GDP is going up, ISM PMI is going up, NFP is going up, core PCE is going up, then if CPI come up this week, you should not be surprised. Because if CPI so uptick this week, inflation risk will increase, and all of this economic indicator last week and CPI uptick this week, that will say economic boom is coming again and they are starting their rate cut. You know, dollar was vertical last week from beginning to end, and traders are saying after doing bad thing in the sideways range that gold is not following relationship. But gold is already running second inflation wave risk. Dollar was late to realize that inflation risk is real. That's why entire week dollar was vertical and gold was sideways. So CPI uptick problem for gold, second inflation wave, and Fed clearly said next cut size will be 25. And it is market sentiment. Some see it as a policy mistake. Some saying they should skip in November FOMC meeting, or they should only do 25, or they should totally stop rate cut. Because if soft landing is real, if soft landing is happening, why they are doing rate cut? They have golden opportunity to maintain 5% interest rate until new crisis come. Or if CPI come down, it's so downtick this week, because you again have PPI this week. Inflation risk are increasing every day, but again problem after this strong, all of these numbers, GDP, PCE, NFP and service PMI, hard to believe that CPI will come weak and it will show downtick. But even if it show downtick, then it will create deflation risk, because in this condition NFP was strong enough to motivate Fed only do 25 or skip rate cut. At the same time, if CPI keep collapsing, inflation keep going down, PCE too, then real interest rate will spike. That is their ultimate goal. So you can say both way. In theory, looks like CPI is bearish for gold this week. Goes up, inflation risk, Less rate cut goes down deflation risk. So for intraday trader, this is your new sideways range between 2671 and 2631. And this is your big resistance 2671 based on Elliott wave counting. Projection target for wave Y. If range breakout to downside, because Fed puppet had confirmed next cut size will be 25. In that case, 2631 can break out and it can retest this lower trend line. That will be first one, and that will be near 2590 level. After all of those news, if again gold breakout 2671, it is like overbought, and until price retest this trend line, do not expect big buying wave. Previously it was only gold, now dollar and 10-year bond yield. They are pricing second inflation wave risk. Rate cut are pricing out. So bank raised their target $200. Goldman Sachs Bank from 2700 to 2900. So until price make a triangle chart pattern, that's mean one more up and down movement, or retest this trend line, because more it goes up, this is clear inflation wave risk, and this is last month before election. Because one election over, there is no incentive for Fed or Biden to hide recession by fake economic indicator. Your choice, you can see NAP as fake or by doing economic stimulus. Because what they did in March this year, ignoring second inflation wave, when everything was booming, Bitcoin, gold, silver, everything was breaking out. That was ultra loose monetary policy, and now it is having effect. There is clear hawkish Fed risk right now. So intraday clear resistance 2671 and big dynamic support line. As a static support you can take it 2590. If you see daily chart, then same wave counting, same trend line, same setup. As long as price trading above this trend line, it is bullish. If trend line break out, then technically it can turn bearish. But fundamental right now, bearish for gold. If you see all demand, COT decreased their position last week, maybe panic selling after strong NAP number. After soft landing data last week, I don't think GLD will buy more. If you see number 2 consumer market India, their stock market is going down in vertical line, and there was no major breakout like last 2 year and 1 year. If there is a buyer and FOMO buying is happening, then why it is not breaking out? China, their economic stimulus debate growing every day. If China start growing, stop collapsing, then all commodity demand can increase. Weekly chart after last 3 blue candlestick, now you have red one, or you can say sideways range. Gold monthly time frame, your 5 impulsive wave, ABC flat correction, then 100% projection 2643 on monthly chart, and you have 2 candlesticks showing rejection near that area. This is just beginning of the month, just wait and watch. Immediately after election, nobody needs soft landing. Then on daily chart, you have 2671 resistance level, same level on H4 chart. So these are resistance level based on Elliott wave counting projection level on big higher monthly and daily time frame. So trend must end about 2600. And you have one more big news, FOMC minute this week. So again big action this week possible. But all FOMO buyers wait for retest of this first lower trend line. Before that, only wait and watch. And as long as price trading above this trend line, that means static 2590 level, it is bullish. So fundamental, all which came last week, they were bearish, and gold did not break out 2671 level. If technical turn bearish, then everything can start changing. But for more clarity for beginner intraday on H4, wait for range breakout. On retest, you can start trading. But upside range breakout will be highly overbought. It can return back to range again. If lower range breakout, then on retest you can start selling. And for major selling, you have to wait for trendline breakout near 2590.